Welcome to Cambridge House Live. I'm Bridget Anderson and I'm joined by Michael Berry, the creator of Discovery Investing. Nice to see you again, Michael.
Great to see you, Bridget.
Let's start off with the global economy. Where do you see things right now?
Things are slowing. Things are slowing in Europe, things are slowing in Asia, and things are very slow here in both Canada and the United States.
What are some of the reasons behind that?
Well, I think there's no doubt there are deflationary headwinds almost everywhere, and the central bankers of the world, and I think that's of the entire world, really want to see inflation. So they're printing lots of money and they're buying lots of bonds and they're pushing hard to get some inflation into the economies, and it really hasn't worked. The inflation rate is still too low. So more than anything else, everybody's worried about deflation, and that's slowing growth and slowing consumer work and so on.
And so do you see that inflation is going to become an issue in the near term, or is this something that we should be looking at over the next several years?
It's something we should hope we have in moderation over the next several years. Inflation isn't a problem now unless you have to eat, have to have a house, or have to drive a car. I mean, for the consumer, inflation is a problem, but the government measures it differently. And so inflation, the way the government measures, is 1%. And that's a problem. And what they're really worried about is, could we slip into a collapsing deflationary kind of environment? So I think we have 2 years of deleveraging, of paying down the debt, 18 months to 2 years before we get inflation. I think then we'll get some inflation, and then we'll have the commodity cycle take off again.
Now, you really do pay attention to what's happening globally, and you and your son travel the world looking at what's going on in different markets. What specifically are you looking for?
We're looking for those areas of the world where there's organic growth, where there's development of a middle class. And we're seeing it. We're seeing it in the rest of the world. We're seeing it in China, we're seeing it in India to a lesser degree, but there are many other countries where the quality of life is increasing. People are learning, they're living longer, they're having fewer children, they're a little bit healthier because they're eating better, and so this middle class is emerging in the rest of the world.
And that middle class needs all kinds of things to keep it going and to help it grow. So for investment opportunities, what should investors be looking for if they're following your train of thought?
Well, I'm going to speak on this tomorrow, actually, and I spoke on this at the Federal Reserve a few weeks ago. A wide variety of things, and typically when we come here we talk about metals, copper and all those things, uranium and electric metals and rare earths, but there's a wide range. Potable water is going to be important. Drinkable water is in short supply almost everywhere in the world. Fertilizer for beef and chicken and poultry and things like that. Nutrition is going to become much more important. So the discoveries that we're going to start looking for will be in very, very different areas related to quality of life issues, like nutrition.
And when you talk about fertilizer or even water, I mean, there's jurisdictions that stand out in my mind. What stands out for you?
Oh, well, we're headed to Saskatoon on Tuesday, presenting at a big dinner that Premier Wall is going to be at, I believe, and we're going to be talking there about potash. And Saskatchewan is a supplier of potash to the world. Saskatchewan, there's only 1 million people in Saskatchewan, lots of land, lots of potable water, and lots of fertilizer. So here's a great contribution Canadians can make to the rest of the world in terms of higher quality of life.
So let's talk a little bit about some of the metals then, and really when we're looking around at this conference, we're talking about the junior mining sector, and it has been a really rough time. So what are you seeing happening there?
Well, I think it has been a rough time, and a lot of companies that we've come to hope for, to love, are going to be gone, because simply the capital markets are not allocating capital for their development. But there are a core of good companies that are going to be able to sustain themselves for the next couple of years till we get the commodity prices higher. I like uranium, for example. I think it probably lead us the way out here. The Chinese are still buying copper, so copper's got a lot.
But there has been a slowdown.
There has been a slowdown, but the slowdown in China is from sort of 10% to 7%, so it's still very high rates of growth in China.
And what about India? There's been India and the other BRIC countries, so Brazil and Russia. Are we seeing the growth picking up there, or is it sustainable?
No, not yet, but it will be. India is quite a different story because it is a democracy. It's a very large, very poor country, and it's behind China. So it's sort of moving along, and I think it'll be fine as we move down the road. The middle class in India will develop over a much longer time frame because it's got much further to go. But poverty is declining in the rest of the world, and that's a great news for all of us in the discovery sector.
And going back to what you were saying about that development of the middle class as well.
Once you have a middle class, you have consumer demand. The middle class wants things. Mexico is a good case study of a country where the middle class is now really developing quickly. They want refrigerators, they want washers and dryers, they want iPods and iPads and televisions. And 80% of Mexicans now live in the city, so there's a big move, there's a big urbanization or move to the cities that's going on around the world. That will be the engine in the next 2 to 3 years that will lead us out of where we are today.
Now, looking back in 2012, you were concerned about a rare earth strategy for the U.S. What are your views on that now?
They haven't changed. It's a good question you asked that. Rare earths are important. It's a very small market. The Chinese still dominate the rare earth supply chain from actual mining to actually production of the magnets and the elements. And we're still trying to figure out in Canada and the U.S. how we move forward and actually not only mine the stuff, but actually build the supply chain that will allow us to integrate into the automobiles and the cars of the future.
So still some work to be done there, by the
sounds of it. A lot.
They're
strategic. China controls a lot of these things. China can't do this forever. So we're getting there, but it's very, very slow progress on this side.
Wanted to get your thoughts on a concept that you've talked about a fair bit called optionality. Can you explain that?
Yeah. The companies that will survive are the companies that will look inward and do some analysis and decide about what options they have for sustaining themselves and for moving their products and their properties, if they're miners, forward. And so you want to be buying companies, and I recommend to my clients, you want to be looking at companies that have these options. They can develop this project, or maybe they have a portfolio of projects they can develop. They can get into rare earth elements. They have some special set of options that they can actually choose to go down the road. Maybe develop a project on a much smaller basis in terms of capital requirements. Those kinds of things are the options that the survivors will have.
And you have also talked about investor relations, saying that it's especially important. And I would imagine particularly when there's this kind of market going on. So why is it that it's so important, and what should investors be looking for?
Well, what actually happens in this kind of a market is investor relations basically ceases. And it's the wrong time. Now is when companies should be out there selling their wares, convincing them that management is still in the saddle and looking after them and moving down the road and making progress. Because when the turn does come, whether that's a year or 18 months or 2 years, they're going to be the ones who will have communicated, and they'll be ready, they'll be positioned for the share prices to move up much higher.
Before I let you go, I want to ask you were talking about the Federal Reserve and that you do testify. And so about quantitative easing, we talked a lot about this in January. Where do you see that now?
That will go on for as long as necessary. Chairman Bernanke has kind of pulled a bait and switch. I don't know, last week at one point the market was up, gold was up by $20 or $30, and then in the same conversation, gold fell, down $14. He cannot afford, and the country cannot, the U.S. and Canada cannot afford to stop. The Japanese are now doing 3 times the quantitative easing we're doing, knocking their currency down. They simply can't afford to have a deflationary experience. They will not stop quantitative easing.
What would be the effect if they did stop?
I think it would be like the train coming to a stop. You'd have much slower growth. You'd have much lower inflation. They talk about employment, but what they really, really want is inflation.
And you think that's still a couple of years?
It's at least a couple of years, in my opinion. Yeah, I think it's going to be tough.
Okay, thanks very much, Michael. Appreciate it.
Bridget, my pleasure. Thank you.